Welcome to Insights. I'm Eric. Thanks for stopping by again today. We're going to talk about the U.S. Home Construction Index. It's popped up on the matrix as reset. It's a reset within a primary trend that's been up for 13 months and has produced a 58% return. And you can see across the triple time frames that everything is up, and we have a breakout in the daily. So this is the reset driven by the daily. If you want to keep up with, and if you're new to the matrix, click the link of the evolution of the trade and understand the four phases so you can better understand these discussions. Embedded inside the matrix are all these help files, these links. I would click them. Most of them are videos. Watch them. It'll explain the different parts of the matrix to you in quick hit segments. It's something that will help you move through how to use the matrix within the evolution of the trade and how the evolution of the trade moves from flip all the way to primary trend decline phase. So right now we're in the phase 3, which is the alignment and energy phase. This is the phase that we see a sell-off sometimes within the 3 time frames, and it creates what you would call resets. Whether or not these resets are viable is usually determined by energy. There is no energy feed for home builders, but we can take a look that they often take a cue from the bond market. And I've included the bond market here. We're going to talk about that in a second. The bond market itself has had fairly large energy builds, and it's currently unwinding them. But they're going to relate to the home builder home segment or home construction. A dissipation of a bullish energy build usually causes yields to drop or prices to rally, which is favorable to home construction. So we're going to take a look at that in just a second. First, I want to run down the name column. We can see that we're in triple up. That's trip with an up arrow. This is a mid-cycle reset, and that's mid-cycle because if you look across the 3 time frames, the weekly trend or the secondary trend shows some extension here. We see a 1.4 and a 1.19, and that is a little bit extended. We don't have, it's not statistically significant, but it's just enough to knock it from an early to a mid-cycle. So it's something to consider. In general, and we can see in the monthly too, before I go on, the price cycle is pretty well extended, and that's one of the reasons why it's mid-cycle. The rally that we've seen in the 13 months is pretty impressive. It's red, and it rarely gets statistically extended here. So whether or not you want to chase this is kind of up to you. We've made a lot of money in the primary trend. This might not be the best reset in the world, and that's why it's mid-cycle. As a rule, people who follow the evolution of the trade try to stay away from buying or escalating core positions when you have mid or late cycle. Late cycle you don't touch at all. Mid cycle it's kind of the individual's call how much risk they want to take, but it's mid cycle right here because we're at 0.33, and that is well above zero. So it is something to consider. So let's take a look in closer detail. Here's ITB, which is the ETF for U.S. home construction. And we know we have a flip and we have a realignment. So it's starting to turn higher. It doesn't look totally impressive on the daily, but we can see that the energy builds in the 10-year, which ultimately, as the 10 years energy builds dissipate, a bullish energy dissipates, you tend to get rallies here in the 10-year and the 30-year. So you have a dissipation, much sharper dissipation for now in the long bond, which is the 20-year plus. This doesn't exactly always tie to mortgage rates entirely, because mortgage rates carry private sector risk, and some of the rates that you see in the public sector are not market-driven 100%, but that's another discussion completely. But we are dissipating this bullish energy build, but the dissipation process has just begun. We're much lower or much higher on the 10-year, lower here, but again, DI2, which is kind of the secular trend for DI, is still way up here. It's still 25. It can come way down here. That's going to take months to do that. 3, 6, 9 months it can take to unwind this position. And as we unwind and move downward and down like this, price tends to move up, which then lowers yields, which is favorable to home construction, and assuming that the builders or individuals don't go bankrupt, and that may come, but we might be a little early for that. We can see that the Pro Index, which is located here, that's another aspect of looking at energy. It's Pro Charts. Click this links or these links here for more explanation. Click this link to pull up this chart right here. We can see the Pro Index or the Pros, which is the red line, and the dark red is the public or the public index. We've seen that the pros have been buying off the bottom here and supporting the rally. We'd like to see a breakout of the Pro Index into new highs or some type of rally, a strong rally that would lead price. But for now, everything is going in the way you want it. The pros are buying this reaction from the low. The public is buying a lot, but the public tends to buy during bull markets, so this is not unexpected. The public will also sell during a bear market and sell relentlessly, so the public doesn't give us a lot of information. It's the pros that step in and buy ahead of time. So this is all supportive. In terms of the seasonality, and we don't have too much seasonality for the home builder index itself, 2006 only. We can see that June is the worst month, and we're coming out of that. That's really the time to buy. So this really does jive with the reset here. The low comes in June, then we have a decent period from July to August, and then a pause in the fall. So we could be setting up for a 2-month rally here. So while this is a 0.33, which is mid-cycle, and again, if you have a core position, you have to debate whether or not you're going to add to that position on this reset. So it's a reset's not establishing of a position. We've had a core position in this U.S. home construction for 13 months. So this is just a minor escalation of this one. And it really depends on where you stand. If you've had enough of where you are and you think your position's big enough, you don't have to chase a mid-cycle, but it does line up pretty well with the seasonality, and there is an unwinding of energy in the bond market, which is bullish. A bullish energy unwind, which is ultimately going to send prices up or yields lower, which will support home builders, or at least in theory it will do that. This is a decent reset. Again, it would be much better if it was early, but the question is whether or not there's other markets that compete with the U.S. home builders, and the answer is yes. I mean, I can cite coffee as an example, and other markets that are designated earlier, but they've already generated their signal. And this is a core position that we've already had, or anyone who follows this closely has bought the flip 13 months ago. So this is just something that you're considering tweaking. If you have any questions on the home builders, there's no need to talk about this too much longer. I just contact me directly through the blog. The logic that I just discussed here applies for every market inside the matrix. So if you have any discussion here, it can probably apply to markets that you really are focusing on too. Other than that, thanks for watching the video and enjoy your trading day.